Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, June 17th at about 1 p.m. Eastern. Well, Wall Street's main indexes edged higher today after a brutal sell-off due to recession fears triggered by a series of interest rate hikes by the Federal Reserve and other major central banks. Excuse me. Investors are worried about inflation this year. I'm sure we all are, as we adopt to the end of the era of cheap money and price pressures hurting corporate profits and economic growth. Still, as the analysts on CNBC insisted this morning, we are closer to the bottom for major indexes, so that's encouraging. We will see what happens. And now let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. This is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, when I captured this chart today, the SPY was, look at the hard right edge of the chart, the SPY was trading at $367.48, about 36.74 on the S&P 500 itself. It is actually now 23% below the SPY's last all-time closing high on January 3rd at $477.71. Now, we know that the SPY fell from that January high, fell in a downtrend, lower highs, lower lows, then started back up in March and came up here to this last major high at the end of March at $462, then rolled over from that, did a dumpster dive back down through the 200-day moving average, the black line, the 50-day, the green, and the red line, the 20-day moving average. So moved down there, making lower highs, and then we need to adjust our trend line here. And it almost, the 20-day moving average almost acted as that downtrend line. And we got a series of lower highs and lower lows, which of course defines a downtrend. We fell down here, down to consolidate at 385, 390, right here in the middle of May. So things calmed down a little bit. The old saying is leave in May and go away. May was actually, we experienced this decent looking, I mean, we're at the bottom, and we thought all these other lows were the bottom, and of course they weren't. We found that out the hard way. But it came down here to right around consolidate around 387, broke back up above the 20-day, then started consolidating back along these lines here at 400, 410. And it looked like, well, heck, maybe we've got something going here. But I know better. I've been in the market long enough not to say this is the bottom. I thought it looked maybe okay, but that was not to be. And last week, the SPY started down precipitously. The CPI, the Consumer Price Index, we put out a broad message on that, a bad message, I should say, on a week ago on Friday when it gapped down. The SPY gapped down after the CPI came out. The CPI came down on that day, and then it gapped down after that on Monday. And this week has been pretty hairy here, pretty volatile. Now, again, when I captured this chart, the SPY was trading at 367.48. Today's low, intraday low, so far is 362.17. So we need to monitor this level here, 362 to 365 level going into next week. Now, I realize that many traders and investors have never seen a bear market before. It's never a whole lot of fun, but please do know that the market does have an upside bias. However, these down markets can be tricky to trade. Sometimes the best place is on the sidelines. Now, if we start up next week, please know that we've got a gap here about 371 that could act as resistance, technical resistance. We have that other big gap up here at 383 in that zone, and that could definitely act as resistance as well. Remember that your chief strategy at all times, sometimes we lose track of it. Our chief strategy, the most important thing, is to protect your capital at all times. After all, if you don't have your capital, you're out of the game. So you may want to use protective stops as part of your strategy. I know I certainly do, especially in this market. Okay, now let's go on to our next chart. It's a daily chart of the Invesco QQQ. We know it represents the Nasdaq 100, a major index in the market. The top momentum stocks kind of drive the Nasdaq 100. Actually, the Nasdaq 100 is made up of the top 100 by market capitalization of non-financial stocks in the Nasdaq stock market. Now, when I captured this chart today, look on the hard right edge. Over here, the QQQ was trading at $275.95. It is now 32% below its all-time closing high. Look left with me. All-time closing high was back on November 19th at about $403. So the QQQ has fallen pretty dramatically since that November 21 all-time high. And again, we're down now 32%. Typically, when a stock or an asset is 20% or below the last all-time or the all-time closing high, we say it's in bear market territory. So the Qs are in 32% down from its all-time high. Definitely a growling bear here. We'll see how long it lasts. Now, the last time the QQQ was here, please know it was back in November of 2020. So our major high on this chart was back here. Our recent high was at March 29th, right here at 371.83. It had fallen from its January opening all the way down, rallied up with the SPY back up through the 20-day, the 50-day, and just stuck its nose, price stuck its nose over the 200-day moving average, and we thought, all right, maybe that was the low. Wrong. It couldn't stay, it couldn't hang, it couldn't stay over the 200-day moving average, and then we saw this very steep downtrend continue, lower highs, lower lows in the tech stocks, in the momentum stocks, came down with kind of a nice little pattern here, as did the SPY, but in a much lower area than the SPYs, moved back up, and that was in May, moved back up in June to consolidate, and we thought, all right, but you don't say this is the low, because the market likes nothing more than to make a fool out of all of us who say that. So we just say, well, we'll wait and see. It consolidated here, and then as did the SPY, it fell dramatically in the last 2 weeks. So our low here today, the last 2 days, the QQQs has made a low at about 270. You can use that as your support line here. The level to keep an eye on will be 270. So if it starts rolling over again in the coming week, please remember, it's not how much you earn, it's how much you don't lose. And that especially applies to traders. Not how much you earn, it's how much you don't lose that makes you a success or not. So just telling everybody, continue to be wise and trade carefully. Okay, our final chart for the day is a chart I don't think we've ever looked at before. I wandered through probably 100, 120 sectors, ETFs today, industry group ETFs. I'm looking at the Global X e-commerce ETF, and believe me, I'm not telling you next week get in the market no matter what, but I'm always looking around for opportunities that may emerge. The word there is may. Now, this ETF invests in companies positioned to benefit from the increased adoption of e-commerce as a distribution model, including companies whose principal business is in operating e-commerce platforms, providing e-commerce software and services, and or selling goods and services online, which of course has been moving up the attention to buying online has certainly, that part of our economy has been moving forward, although these stocks have taken quite a dip, as most every stock has in the last 6-8 months. So the top, it has 40 components in it. The top components are Pinduoduo, NetEase, Trip.com, GoDaddy, JD.com. Now, this particular ETF was, you can't see it on this chart, but it came up to an all-time high in February of 2021 at $38, and it made, actually, from when it came out in January 2019, if you look at a long-term chart, you'll see that the eBiz went up like that and pretty much came down like that is where it is now. I looked at that on a monthly chart, so it's made a complete cycle here, especially starting to move down in November of 2021. So I'm looking here now as we move into May of 2022. I can see how it's moved in this downtrend. Of course, it has to do with technology, so it took a hit sooner, like most tech stocks did, than the SPY and value stocks. It's come down here, and again, I'm not encouraging anybody to buy anything, but I'm looking at this. I'm looking for potential bottoms forming. We'll see if they are or not, but you've got to really think about it before you get into it. So it's gone in this almost a complete cycle from its inception in January 2019. When I captured the chart today, the eBiz was trading at $16.64. Now it is below its major moving averages, as you can see, the 200-day way up here, the green line, the 50-day down here. Actually, it moved up a couple of weeks ago to that 50-day moving average and then fell back down. But the interesting thing to me is here, and is that it's trading here. It has support here at about $16, and it's been touched one time in the earlier part of May, the second time in a little over the midpoint of May, moved back up again to that 50-day moving average we talked about, came back down here. So it looks like, at least at the moment, 16 looks to be an area where buyers come in when it gets down to that. Now, I can't swear that's going to happen next week, but I am going to watch it. If in the coming week, the market itself is not in a horrible, doesn't continue down a lot lower, so we got to keep an eye on the SPY for that one. If in the coming week the EBIX stays above $16 and the market is not in a terrible mood, I will buy a small portion of the EBIX for my trading portfolio, and my stop will be a hard stop placed with my broker at $15.25. If and when the EBIX can rise above and close above the green line right here, it's at $18.57. If and when the EBIX can rise above and close above the 50-day moving average, I want 3 consecutive closes. I will add to my position, and by then I will be using a trailing stop. So you might want to keep an eye on the EBIX in the coming week. Now, please know that this is the perfect time to invest in yourself. Take a few minutes to check out my online training programs and see how you can become a better trader. These programs include our flagship training, 7 Steps to Successful Trading, how to swing trade successfully, that's valuable in this market, how to trade the trend to profits, that's going to be golden when this bottom gets in, plus 3 winning setups, definitely good for beginners, how to read charts, and another program that is awesome, going to be very, very soon, is how to bottom fish like a pro, something we all need to know. So these programs, please know, are timeless, they are low priced, and they can help you increase your gains quickly and easily. To see all of my online training programs, simply go to the link on the screen right up here on this screen, or easier still, just click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.